Good morning, everyone, and good evening to those joining us from the US. Welcome to the QuickFee Q4 FY24 Business Update webinar. On our call today, we have Simon Yandel, CFO, and Jennifer Warrower, President North America, to run through the presentation. And my name is Katie McKenzie, Investor Relations for QuickFee. The presentation will run for about 20 minutes, and then we'll open up for Q&A. We won't be using the hand-raising function, so if you have any questions, please type them into the Q&A tab at the top of the screen. If we don't have time to get through all the questions today, then we'll reach out to you directly following the webinar. Now, I'd like to hand over to Jennifer Warrower.
Thank you very much, Katie, and thank you to everyone that's able to join us this morning and this evening in the US. We're very pleased to announce that we have continued the trend set in H1 and Q3 of this fiscal year with another strong quarter of revenue growth, with Q4 being up 42% on PCP to a record of 6.1 million. Our finance product growth led the way, with finance revenue growth in the US up 39%, TTV up 9%, and revenue yield up 250 basis points. In Australia, finance TTV was up 14% and revenue up 46% on PCP, and revenue yield was up 300 basis points. Our strategy to unlock transformational growth in the US remains on track, and we continue to be laser focused on growth underpinned by cost-effective operations and processes that will scale over time. In the last quarter, we achieved several important operational milestones, including the significant increase in invoices sent through QuickFee Connect, up 120% in Q4 over Q3, and the strategic integration with Nula, which expands our product offering and provides a foundation for highly scalable future integrations. In June 2024, we finalized a well-supported placement and oversubscribed SPP, raising 4.4 million to fund further loan book growth in both the US and Australia. Finally, we posted a positive EBITDA in Q4 as we continue to track towards sustained profitability. With that, I'll hand it over to Simon to run through the numbers in detail.
Thank you, Jennifer. Good morning, everyone. Here are the Q4 metrics as mentioned, with growth across all products in both markets. As Jennifer mentioned, group revenue for the quarter was up 42% to 6.1 million Australian dollars from 4.3 million in Q4 FY23, which was a record revenue quarter for the business. The revenue highlights include US finance revenue of $714,000, up 39% on PCP. US Pay Now revenue, which is both ACH and card, up 27% to $1.5 million, and Australian finance revenue was up 46% to 2.3 million Australian dollars. All of these are record revenue quarters for each of these products, and we delivered TTV growth across all products as shown. On this slide, we've explained previously, Q4 is traditionally the strongest in each financial year, as you can see in the top left chart. The top right chart shows rolling 12-month revenue on a quarterly basis. This presents the growth trend in a more consistent way and eliminates that seasonality you can see on the left. This is why we report quarterly volume versus the prior corresponding quarter in terms of growth percentage, rather than quarter-on-quarter growth rates, which can fluctuate, and some quarters can actually be lower than the immediately previous quarter. So showing quarter versus PCP and rolling 12 months presents a more consistent picture of the growth trend. Q4 is the strongest of the financial year in the US as the tax season finishes and the backlog of billing is caught up. And in Australia, we generally see a very strong lead up to end of financial year. And we did this year as well, with an all-time record month in June this year of over $7 million. Here we present the breakdown between price and volume growth in our finance product. And as a reminder, our finance product delivers 25 times the revenue yield of our US Pay Now product from the same volume for every dollar processed. The chart on the top right of this slide shows Australia lending volume for Q4 FY23 and Q4 FY24, then the revenue yield percentage, which is revenue divided by that volume, and on the far right, the current quarter revenue growth over PCP, split between growth from volume and growth from yield. So in that last column, you can see $0.2 million of revenue growth is from higher volume of lending, and $0.5 million is from the increase in the rates we charged over and above PCP revenue of $1.6 million. The yield increase is driven by higher rates implemented over the past 2 years, plus a higher share of lending derived from our legal disbursement funding book. This has a higher yield than our regular fee funding product, as interest compounds monthly on loans originated in prior months. So you don't have to actually originate loans to still earn interest on that product. Similarly, in the US chart, bottom right, 0.1 million has come from volume growth and 0.1 million from yield growth over the prior year revenue of 0.5 million. And we continue to incur minimal bad debts through our low credit risk business model, and Q4 was no exception, with very, very minimal bad debts. I'll pass back to Jennifer to discuss the business in more detail.
Thank you, Simon. Now, as many of you already know, QuickFee was founded in Australia in 2009, and we entered the US market in 2016. And since our inception, we've really had one mission: to help professional service firms get paid faster. QuickFee's payment platform allows a firm's clients to pay their invoice by ACH or card, which we refer to as Pay Now. And you can think of this as traditional digital payments. Then we also offer a lending option that's proprietary to QuickFee called QuickFee Finance. This pay over time option allows clients to pay over 3, 6, 9, or 12 months, while the firm gets paid in full at no cost to the firm. Finally, our Connect product is a significant growth enabler in the US market. Our existing customers have a combined annual revenue of around $10 billion. Right now, only $1.4 billion of that annual revenue is processed through QuickFee. The remaining 8.6 is primarily being received by check. This is where Connect comes in. Connect provides an integration to leading practice management solutions, helping turn a manual, primarily paper-based invoicing process into an automated digital process by sending out the invoices generated within the practice management solution via email. Those invoices have a payment link on them, which sends the customers directly to the QuickFee payment page. We now have 4 integrations effective this month, being CCH Pro System Effects, CCH Access, Iris Practice Engine, and Thomson Reuters Practice CS. Now, like any product in any industry, we naturally have competitors in our market, but we're also very well positioned to win against those competitors. In the Pay Now area of our business, the majority of traditional ACH and card processors do not have an integration with practice management solutions. Additionally, many other processors do not have the option for the credit card surcharges to be passed on to the firm's clients. There are 3 main attributes that differentiate our pay over time offering from other financing providers in the market. Other providers in the market tend to be consumer focused and aren't designed for firms that are serving business clients. They typically have a very low invoice maximum, around $17,500, and they require a credit check for every single customer. And most customers don't want to have a hit on their credit score simply because they paid an invoice. QuickFee is designed for professional service firms. Our finance solution has no invoice maximum. The clients of firms don't need to get a credit check done to pay an invoice. We integrate with leading practice management solutions, and we have a pricing model that works for small, mid-size, and very large firms. We are the best fit for the largest portion of the market. When we look across our customer base as to why firms work with QuickFee, or when we win a new customer, it typically boils down into one of 4 reasons, and sometimes a combination of these. First, they want to reduce accounts receivable, or AR. AR is typically the number 1 item on a firm's balance sheet, and we help turn AR into cash. Second, they want to grow their business. There are many priorities competing for cash, and we can help find more of it for firms and their clients. Third, they want to automate their processes. We increase efficiency while improving the client and employee experience. And finally, as I mentioned before, they want to save on fees. Firms can save thousands and sometimes hundreds of thousands of dollars on credit card merchant fees simply by passing on credit card surcharges to their customers. Now, we're very proud of the firms that we work with that have trusted us with their business. In fact, we work with 35% of the firms from the Inside Public Accounting, or IPA, Top 400, and we have 27% of the firms in the BDO Alliance as our customers. In addition to working with incredible firms, we also take great pride when they share their feedback and testimonials with us and with the market, such as you see here from Fraser and Dieter. Now I want to pivot and recap on our current strategy and share Q4 progress. Now we shared this slide at Investor Day in March and also during our Q3 business update, but given it's the foundation of our strategy and key focus areas for FY25, I want to do a brief recap on it. If you envision a flywheel that when turning at full force compounds the efforts of every single component, that's what I'm trying to represent here today. This flywheel showcases the 5 areas that we believe will unlock transformational growth in the US market. Our number 1 lever on our flywheel is QuickFee Finance. As Simon mentioned earlier, QuickFee Finance has revenue yields that are approximately 25 times those of our Pay Now offerings, all while delivering a solution to the market that's unmatched by any other company in the US. It's the reason we came to the US, and it's absolutely instrumental in delivering transformational growth. I think of QuickFee Finance as our crown jewel of sorts. Secondly, QuickFee Connect is a key part of our growth strategy. Many firms that have adopted Connect have seen their transaction volume grow by up to 40% in the same period over last year. In addition to that, by integrating QuickFee Connect with the most widely used practice management solutions in the US, firms are able to unlock automation capabilities that do not exist in the practice management solution itself. To maximize the transaction volume we capture from our customers, Connect is key. In addition to QuickFee Finance and Connect, we need to deliver differentiated technology, build strong partnerships with other leaders in the industry so we can rapidly grow our reach, drive increased awareness, and acquire new customers at scale on a one-to-many basis. And finally, we want to leverage automation across all areas of our business. How did our key focus areas translate into results in the fourth quarter? Well, as you'll see, our finance rolling 12-month TTV by quarter is the chart on the top left, and our Pay Now rolling TTV by quarter is on the right. US finance revenue was up 39% over the prior corresponding period. Connect invoice volume saw an uplift of 120% over Q3, and H2 saw 10 times the number of Connect invoices sent as H1. In Q4, our average firm size for new firms signed up was 19 million, compared to 4.5 million in Q3. Our Connect functionality and automation capabilities are appealing to larger firms, as well as smaller firms, and that's translating into more opportunity and transaction volume. Now let's take a look at how Australia did in Q4. Our business in Australia, led by our founder, Bruce Coombs, has shown consistent growth over the last 12 quarters since COVID, with Q4 delivering record lending, a culmination of all the hard work the team have put in over the financial year. Economic conditions continue to work in our favor as interest rates remain high and inflation has not let up. As mentioned, Australia had a very strong Q4 with finance revenue up 46% on the prior corresponding period, driven by both record lending volumes and also yields, particularly from the growing legal disbursements funding product. The disbursements funding product provides funding for disbursement costs for personal injury claims. The interest on these loans compounds as there are no installments repaid during the term of the loan. This delivers higher revenue per dollar originated than the traditional fee funding product. I'll now hand it back over to Simon to share some details around our full FY24 performance and liquidity position.
Thank you, Jennifer. So as a recap, over the quarter, we executed a 4.4 million Australian dollar capital raise, a $3.75 million placement that was very well supported, and a share purchase plan that was originally set at $500,000 and was upsized to $667,000 due to demand. The capital raised, whilst we didn't need to raise capital to achieve profitability, the capital raise will be used to fund further loan growth in both the US and Australia to support the momentum in the business. So we've got a strengthened balance sheet and we're well funded to grow our loan book further. At 30 June, the company had $6.9 million available cash on hand and a borrowing capacity of a further 19.6 million from existing facilities available to fund future loan growth. And as a reminder, the company contributes 10% to 15% of loan book growth out of our own cash reserves. Given current cash reserves and profitability expectations, we expect any hypothetical potential future capital requirements will be purely for the purposes of funding any future loan book growth, as the recent Q4 capital raise was. So on the next slide, in terms of full FY24 performance, we've talked a lot about Q4. Revenue from the finance product in the US and in Australia, revenues are up 52% and 51% respectively, and US Pay Now revenue is up 18%. We achieved lending TTV of $26.7 million in the US, up 28% on PCP, and we processed Pay Now volumes of nearly $1.4 billion. In Australia, we hit 15 million in originations for the very first time, with a 20% year-on-year growth, achieving a total of 55.5 million Australian dollars. We've recently released our full year results guidance on the next slide. And as a summary here, it shows group revenue up from 14.8 million in FY23, and our guidance is between 20 and 20.5 million Australian dollars for FY24. And EBITDA after interest improving from a $6.6 million loss in FY23 to between a $3 to $4 million loss in FY24, reflecting the revenue growth and cost reductions in the business as we track towards profitability. Importantly, our EBITDA after interest for H2 is expected to be a small loss below $1 million. That supports our confidence in achievement of sustained profitability ahead. With that, I'll pass back to Jennifer to wrap up.
Great. Thank you, Simon. We're proud of our Q4 and full year results, but also recognize there is much more work to do. We have positive momentum in key metrics and continue to manage our cost base very carefully. However, we're acutely aware of the importance of demonstrating sustained profitability, and that is, of course, our immediate priority. We remain confident that we have the right strategy, the right management team, and solid momentum to continue to grow the business at an accelerated rate. As it relates to the US market, I shared with you earlier and in previous investor presentations and updates, our flywheel of strategic priorities that we are confident will unlock transformational growth in the US. We'll remain focused and heads down on executing on the strategy we've set out for FY25, which puts QuickFee Finance and QuickFee Connect at the heart of everything that we do. I want to thank each and every one of you for your continued support and confidence in what we're doing, and I'll now hand it back over to Katie to moderate any questions that may have come in.
Great, thank you very much, Jennifer and Simon, for the quarterly update. And just a reminder to everybody that if you do have questions, please feel free to type them into the Q&A tab just at the top of the screen. So Jennifer, just while we're waiting for some questions to come in, you have talked quite a bit in this presentation about Connect and about Connect integrations. You were able to talk a little bit about what's coming up in FY25?
Sure. Yeah, we will be launching our next integration, which is Thomson Reuters Practice CS. I mentioned it earlier, and we will be launching that this month. So I'm aware that there are not that many days left in this month, so we will be launching very soon, and we're excited about that. That is an integration that has the largest number of our existing QuickFee customers using that practice management solution. So we're excited to get that into the market and help those firms transform how they process their accounts receivable.
Okay, great. Thank you. We do have quite a few questions have just come through. This might be one for Simon. Are you able to talk about the US finance TTV growth? The question here is that the growth rate has been a little slower in the last few quarters. What would explain that slower rate of growth in TTV?
Yeah, go ahead, Simon.
Yeah, no, I don't think there's anything remarkable there. But Jennifer, would you like to comment on that?
Yeah, I was going to say something similar. I mean, we've been through, as you can imagine, we do significant analysis every month, every quarter on a customer by customer basis around, especially around our loan book and our QuickFee finance volume. And I would say probably there were some. When we look back, the only thing that is worth calling out is we had some very significant kind of one-off. If we get a new firm in and they're clearing out their AR and they kind of catch up, we saw that in Q4 of FY23, and we didn't have exactly the same situation in Q4 of FY24. So sometimes you see those one-off clearing out of AR, and you don't see them matched in the same period of the next year. That was really the only thing. But we've had good customer retention. Our key customers continue to produce loans as well as quotes for loans. So there's nothing remarkable other than that stands out.
Okay, thank you. We've got a question here about the number of firms in the US and the growth rate of that. Are you able to talk to the number of firms that you are acquiring, your number of customers?
Yeah, I think when you're looking at the US firms in growth in Q4, the slower rate of growth can be attributed to a few things. I mean, I think we were a little bit slower coming out of tax season. So we had a nice pipeline going into tax season, but coming out of tax season, firms were a little bit slower to get back to business. So something that you'd see after the tax deadlines passed in April and May, we'd pick back up, but there was a little bit of a slower ramp to bring on new firms. I think the other part is, as we are navigating political uncertainty in the U.S., as you can imagine, and I'm sure you've seen on the news, it certainly does cause some. Some firms will use that, and sometimes it's well justified, and sometimes they're looking for a way to delay decision making. But we did see some that we expected to land in the fourth quarter push to the first quarter of this fiscal year. So. I see the other part of that question around, are we losing firms to competition? I would say that there has been some firm attrition or losses to competitors in the market. I think that we're very clear on our win-loss efforts. We interview every single firm that makes a decision to leave, and we're very clear on why they left. And we have a very prescriptive roadmap to ensure that we minimize the number of losses.
Yeah, Katie, it's not in the deck we put up, but it was in the appendix of the results release that we grew firms over the course of the financial year 5%, and we're just touching on about 800 active firms in the US. So that's again another record.
Yeah, and I think it might be worth adding there as well that the firms which we did put in the release, the average revenue of the firms that we're signing up are significantly larger than the ones that we were signing up previously. So the number of firms now, one firm is actually, a bigger firm than one firm a year ago.
Correct.
Yeah, okay. We've got a very specific question there. This might be one for you, Simon. What's the average transaction volume per firm? I'm not sure if we release that information publicly or if you've got that at hand.
No, but you could literally divide the total TTV by the 794 firms that transacted in the year to get that number. We'll be able to share that number when we actually release our full year results, but it's very much derived from the numbers that already are shared in the market.
Yeah, okay. We had a question there on the business environment. I think, Jennifer, you sort of touched on that in your previous answer. Looking forward now, we've got a question on the key priorities for Q1. Are you able to touch on that, Jennifer?
Yeah, absolutely. So we're really dialed in to what's most important. So we have 4 key priorities for the first quarter. Number 1 is around customer retention, and this is making sure that our existing customers are happy, they're transacting, and that we're taking really good care of them. And kind of to the earlier question about if we lose customers to competitors, we want to make sure that doesn't happen. So customer retention is critical. Number 2 is around new customer acquisition. We want to be out growing the number of firms that we're working with inside our customer base. So that is critically important for this quarter, particularly as it relates to Thomson Reuters Practice CS customers. Our third key priority for the quarter is around Connect, and we want to accelerate Connect adoption and usage. Again, really fueled by that Thomson Reuters Practice CS integration. And so Connect is key to increasing our overall transaction volume. And then our fourth key priority, and these are not in order, so don't, if you're like, why is that number 4 and not number 1? I'm not putting these in priority order, but is finance. And so making sure that our firms are maximizing their use of finance, that we're helping enable newer firms that have come on, but driving up that finance loan book and transaction volume is critical in the first quarter.
Right, thank you. And just a final question here before I ask the final question, just a reminder to people, if you do have one, type it into the Q&A tab. But the final question here, Jennifer, could you just talk a little bit more about the subscription model for Connect? That is a new model that that you're launching into the market. Are you able to just provide a little bit more colour on that?
Sure. Yeah. So our subscription model is made up of 2 components. So the first component is when someone signs up for Connect, there is an implementation fee that they are charged depending on their practice management solution. And then the subscription is a monthly subscription model, which will be tiered depending on the size of the firm and the number of transactions or invoices that they process in any given month. So we want to make sure that it's fair for the firm, but also not prohibitive to driving transaction volume. And we will be launching details before you have the full year results presentation. You will have information on the exact pricing in our subscription model, and we have run it by many firms that we are in discussions with, and they are all quite happy with the value that they get. So we're excited about it.
Right. Thank you very much. And I can't see any further questions there, but well, hang on, have we got something come through? Just a final question here. Can you give any details on a timeline to being profitable? Simon, that could be one for you.
I think we did discuss this in length in the last couple of presentations, where we've got a track record of revenue. We're continuing to focus on the highest margin products. We'll continue to see revenue growth, and our costs are expected to stay flat or even decrease over FY25. We're not issuing guidance, but I think there's a clear expectation and around the confidence level of being profitable in the near term.
Okay, thank you very much. So if there are no further questions, obviously people can feel free to email Simon or myself. We answer questions on a regular basis from shareholders. Thank you everybody for your attendance today, and we wish you a great rest of your day. Thank you. Bye.
Thank you, everyone.